Welcome back, everyone, for another deep dive. This time, we're going to be looking at something I know a lot of you are interested in.
Yeah,
Trading success
of course.
and how to achieve it. But we're doing it with a bit of a twist today, right?
Absolutely. We're not going to some, Wall Street guru or a hotshot trader, on social media.
Exactly.
We're going to an ancient source.
Yeah. We've got a collection of insights here
Yeah,
that were originally written in Hebrew.
that's right.
So, we're going for some exclusive wisdom here. I like it.
Very exclusive. What's interesting about the source is that it breaks down trading success into three interconnected pillars:
Okay.
content, mechanics, and self-discipline.
Content, mechanics, self-discipline.
Yeah.
Interesting. So most trading advice I've seen over the years is really focused on strategy. This is a little different.
This is really focusing on the foundations of what it takes to actually execute a strategy
Got it.
and do it successfully.
Okay. I'm intrigued. So, I mean, these almost sound philosophical, less about, stock tickers and more about yourself.
Exactly. Content, in this context, refers to having the right information, but also the right information.
Oh.
Meaning, what kind of trader are you?
Right.
Are you somebody who is a day trader reacting to quick shifts in the market?
Yeah.
Or are you somebody who's building a portfolio for the long term?
Right.
So that dictates what kind of information you need. What are the right tools, the right data you should be looking at?
So it's not just about knowing stuff, but knowing the right stuff for you.
Exactly.
That makes a lot of sense because I've definitely felt overwhelmed before by just like the sheer amount of data
Right.
that's out there and not knowing where to even start.
Right. And the source really emphasizes that if you are feeling overwhelmed, that will lead to poor choices.
Makes sense.
Which brings us to our next pillar, mechanics. And so this is interesting because mechanics isn't just about buying low and selling high. It's about flawlessly executing every action.
Oh, wow.
Entering the trade, setting stop-loss orders, even just what platform you're using, it all has to become second nature to you.
So, I mean, speaking of second nature and flawless execution, I have definitely fat-fingered a trade before.
Of course.
And it's not a fun experience. I mean, is that the kind of mistake that this source is talking about?
That is exactly the kind of mistake, and it uses this very vivid analogy. Imagine a concert pianist hitting the wrong keys because of a lack of practice. Sounds jarring, right? Well, in trading, those wrong notes can cost you real money.
Yeah. So even if I have all the right content, all the right knowledge, if I panic and mess up the mechanics, that can totally ruin things.
It can completely ruin things.
Okay. All right. That's a strong image.
Yeah. And that's where self-discipline comes in. This source, perhaps because of its origin, really hammers on this point. And it's about consistently applying your knowledge, your strategy, without emotional interference.
So, I mean, think about a martial artist. Like, their technique is useless
Right.
if they can't control their reactions, like in a fight.
Right. It's all about controlling your emotions.
Okay. All right. That comparison, I get that.
Mhm.
I know I get impatient, especially like when a trade isn't moving how I hoped.
Yeah.
So, I mean, are we talking like meditation here or something?
Well, I don't know about meditation, but the source lays out 25 specific rules, almost like a trader's code.
Oh, wow. 25 rules. Okay.
Yeah, some are pretty straightforward and some are quite counterintuitive.
Okay. Well, 25 is a lot to unpack.
Yeah.
Why don't we pick a few that really stood out to you? I don't know, like it's paradigm shifting or something.
Let's start with this one. The market rewards you for being disciplined. Most people think of discipline as avoiding losses, but this frames it as an investment that pays off over time.
Right.
Almost like compound interest on good habits.
Okay. That's a mental shift I wasn't expecting. So it's not just about not screwing up. It's about actively doing the right thing consistently, and then the market will reward you for that.
Right. Interesting.
And this next one ties into that. Don't try to be someone else. There's so much pressure in trading to copy the hot strategy.
Yeah.
But this source emphasizes finding your style, the one that aligns with your personality and the content you've mastered.
Yeah, man, I've totally fallen for that trap before, chasing the latest guru system.
Right.
But it always felt, I don't know, a bit off, like not quite fitting how I think. So embracing your own quirks is actually good in this framework.
Authenticity is key, according to this source.
Okay.
And that leads to better mechanics, too, as you're more comfortable with tools and approaches that suit you. Now, are you ready for one that's a bit jarring?
Hit me with it. I'm starting to like how this isn't your typical buy the dip type of advice.
Okay. The best loss is the first loss.
Whoa.
Now, logically, any loss is bad.
Right.
Right.
But this rule digs into something deeper.
Wait a minute. Is this about cutting your losses early? Because that's something I'm terrible at. I always just hope things will turn around.
Precisely. The source is saying that clinging to a losing trade, hoping for a miracle, is emotionally driven. It's a lack of self-discipline kicking in. And the first loss is usually the smallest loss. Accepting it quickly frees you up to make better decisions later.
I can see that playing out in my own trades. It's like the longer I hold a loser, the more emotionally invested I get,
Of course.
and then I really don't want to sell, even when I probably should.
And here's the flip side, which also takes discipline.
Okay.
Learn to exit successful trades gradually. Most people are told to let winners run, but this is more nuanced.
So we're not just holding on for dear life. There's a method to it. I'm terrible at knowing when to sell. Like, even when things are going well, I either get greedy or I miss the peak.
Right. So the source uses this gambling analogy. Imagine winning at poker, but instead of betting everything on the next hand, you pocket some chips. This rule is about managing risk even within a winning trade, locking in profits as it moves in your favor.
So, I mean, I could see how that takes the emotion out of it. Not letting greed push you to hold on too long, but also not panicking and selling everything too early. It's like strategic celebration or something.
Exactly. And we've barely scratched the surface of these 25 rules.
Right.
But I think you're getting the idea. It's a different approach to trading success.
Yeah.
One that emphasizes your internal state as much as external market factors.
Okay, so this is fascinating stuff.
Yeah.
Before we get too deep into the rules,
Yeah.
I want to circle back to those three pillars: content, mechanics, self-discipline.
Yeah.
I feel like we sped through content and mechanics a little bit because
Yeah.
we were so eager to get to this juicy self-discipline stuff.
You're right. You're right. We should probably delve a little deeper into those foundations. Let's start with content. What kind of information does this Hebrew source consider essential for a trader? And how does that differ depending on, your individual approach?
Yeah, because I'm still curious about that because like I said, I have definitely felt lost in this sea of data before.
Right.
Knowing what to focus on seems crucial,
Yeah.
but how do you even figure that out?
Well, the source provides some guidance on that, but it also emphasizes that there's no one-size-fits-all answer. It really depends on, well, the source provides some guidance on that, but it also emphasizes that there's no one-size-fits-all answer. It really depends on your trading style and goals. For example, if you're a day trader focused on short-term price movements, you'll need to be deeply familiar with technical analysis.
Right.
Things like chart patterns, indicators, momentum oscillators.
Right, because a day trader needs to make quick decisions based on those real-time fluctuations.
Right.
But what about someone like me?
Mm-hmm.
More interested in long-term investing. What kind of content matters there?
Well, for the long-term investor, the source highlights the importance of fundamental analysis.
Okay.
This means understanding a company's financial health,
Right.
its industry position, its management team, all those factors that contribute to its intrinsic value over time.
So instead of obsessing over, daily price swings, I should be digging into like annual reports, earnings calls, that sort of thing.
Exactly. It's a different mindset, different set of tools.
Okay.
And the source even mentions a few specific resources that were relevant at the time it was written. Of course, those specific tools may be outdated now, but the underlying principle remains the same.
Right.
Find the content that aligns with your investment approach.
Okay. That's helpful. It's like having a map instead of just wandering around in the dark.
Right.
But let's say I've got my content figured out. I'm feeling confident in my knowledge. How do I make sure my mechanics are up to par? What does flawless execution actually look like in practice?
Well, the source gets quite granular here. It even discusses the importance of choosing the right trading platform
Okay.
and becoming intimately familiar with its interface. It stresses the need to practice order entry, setting stop-loss orders, and other actions, until they become second nature.
So it's not just about knowing how to do those things. It's about being able to do them quickly and accurately, like under pressure. Kind of like a pilot running through pre-flight checks, making sure everything's in order before takeoff.
That's a great analogy.
Okay.
The source even provides an example
Okay.
that I found quite striking. It talks about a trader who, had done his research, identified a great opportunity, but then, in the heat of the moment, entered the wrong order type because of a lack of familiarity with his platform.
Oh, no.
He ended up selling when he meant to buy.
Ouch.
And you can imagine the financial consequences.
Yeah, that's a nightmare scenario. It highlights how even even the best content knowledge can be undermined by sloppy mechanics.
Yeah.
It's like having a gourmet meal all prepped, but then burning it to a crisp because you didn't know your way around the kitchen.
A perfect analogy.
Yeah.
And it emphasizes the importance of practice, repetition,
Right.
and building that muscle memory
Nice, yeah.
when it comes to the technical aspects of trading.
Okay, so we've got content, the knowledge and information. We've got mechanics, the flawless execution.
Right.
But how do we cultivate that self-discipline, that inner strength that the source seems so passionate about? Do any of those 25 rules offer specific guidance on that?
Absolutely. In fact, many of the rules we've already discussed directly address self-discipline.
Okay.
For example, the best loss is the first loss is all about overcoming that emotional urge to hold on to losers, hoping they'll magically turn around. You know, it's a call to make rational decisions based on your strategy,
Right.
not on fear or denial.
Right, because in that moment, it's so easy to convince yourself that the trade will eventually come back.
Yeah.
But often that's just wishful thinking.
It
Yeah,
is. It is. And even the rule, don't try to be someone else,
Right.
also speaks to self-discipline in a subtle way.
Okay.
You know, it's about resisting that temptation to chase the latest, hot trading guru or strategy,
Right.
and instead developing a style that aligns with your personality and your risk tolerance.
Yeah, because if you're constantly jumping from one strategy to another, you're never really mastering anything, are you? It's like trying to learn 5 different martial arts at once.
Right.
You end up a jack of all trades, master of none.
Exactly. And that lack of mastery can lead to inconsistency, to
Right.
emotional decision-making, and ultimately to poor results.
Okay, so we're seeing how these rules, even the ones that seem purely tactical, are actually like interwoven with this deeper concept of self-discipline. Like each rule is a thread, and when woven together, they create this tapestry of mental fortitude that helps you navigate the market's ups and downs.
That is a beautiful way to put it. And the Swords actually provides another rule that speaks directly to this idea of mental resilience. Don't trade to make money today, but to have more money tomorrow.
Okay, that's a powerful one. It's about delaying gratification, thinking long-term, and not getting caught up in the short-term noise of the market.
Precisely. It's a reminder that trading is a marathon, not a sprint.
Right.
And to succeed in the long run, you need that unwavering commitment to your goals,
Right.
that ability to withstand temptation and stay the course even when things get tough.
So it's like resisting the urge to eat that entire bag of chips in one sitting, knowing that you'll feel much better in the long run if you pace yourself.
Exactly. It's about making choices that align with your long-term well-being, both financially and emotionally.
Okay, this is all making a lot of sense, but there's one thing I'm still grappling with.
Yeah.
We've talked a lot about discipline, about controlling emotions, but isn't there a danger of becoming too rigid, too stuck in your ways? What if? What if the market changes and your strategy no longer works?
That's a great question, and it brings us to another crucial aspect of self-discipline: adaptability. The source emphasizes that while having a plan is essential, you also need to be willing to adjust course when circumstances change.
So it's like a sailor navigating the open sea.
Yes.
You have your charts, your compass, your planned route, but you also need to be able to adjust your sails when the wind shifts or a storm approaches.
Exactly. And the source actually provides a specific rule to address this. The market is always changing, so you must be willing to adapt your trading strategies accordingly.
Okay, so it's not about blindly following a set of rules. It's about being flexible, being responsive to the ever-evolving nature of the market. But how do you strike that balance between discipline and adaptability? How do you know when to stick to your plan and when to deviate from it?
That's where experience, observation, and continuous learning come in.
Okay.
The source emphasizes the importance of constantly analyzing your trades, both winners and losers, to understand what's working and what's not.
So it's like a scientist conducting experiments, gathering data, and refining their hypotheses based on the results.
Exactly. And the source actually uses a similar analogy, talking about the importance of treating trading like a business.
Okay.
It's about tracking your performance, identifying your strengths and weaknesses, and constantly striving to improve your processes.
Okay, that makes sense.
Okay.
It's not just about making money. It's about building a sustainable trading operation based on sound principles and a commitment to continuous improvement.
Yep.
But let's be honest, trading can be an emotional roller coaster.
Yeah.
Even with all this discipline and adaptability, there are going to be times when fear and greed creep in.
Right.
What does the source say about about dealing with those inevitable emotional swings.
Well, it acknowledges the power of emotions, but emphasizes the importance of not letting them dictate your trading decisions. It provides several rules that speak directly to this challenge, such as, well, it acknowledges the power of emotions, but emphasizes the importance of not letting them dictate your trading decisions. It provides several rules that speak directly to this challenge, such as, don't let your emotions dictate your trading decisions. Sounds obvious, but putting it into practice is tough.
Yeah, easier said than done, right? Especially when you see your hard-earned money on the line.
Yeah.
So how does the source suggest we handle those moments when fear or greed start taking over? Any practical tips?
One technique the source highlights is having a predetermined trading plan and sticking to it regardless of your emotional state. It's about removing impulsivity from the equation.
So kind of like having a set of if-then statements. If the stock drops below X, then I sell no matter how much I want it to rebound.
Exactly. It takes the emotion out of the moment, allowing you to act rationally rather than reacting out of fear or greed.
Right.
This ties into another rule that resonated with me. Always use stop-loss orders to limit your potential losses.
Stop-loss orders, I know those are important, but I'll admit I don't always use them. Sometimes it feels like giving up too soon.
Sure.
How does the source frame their importance?
It uses a powerful metaphor. A stop-loss is like a fire escape in a building.
Okay.
You may never need it, but when you do, you'll be incredibly grateful it's there. It's a safety net that limits your downside risk in case a trade goes against you.
Okay, that's a great way to think about it. It's not about being pessimistic. It's about being prepared for the unexpected, protecting yourself from the worst-case scenario.
Precisely. And it's another example of how self-discipline, in this case the discipline to set those stop losses in advance and stick to them, can protect you from making emotionally driven decisions.
This is all starting to click. I'm seeing how those three pillars, content, mechanics, and self-discipline, really work together to create a foundation for trading success. It's not just about one or the other, it's about all of them reinforcing each other.
Exactly. And speaking of reinforcement, let's touch on a rule that addresses a mistake many traders make, particularly when starting out. Never risk more than you can afford to lose.
Yeah, that seems like common sense. But I know it's easy to get caught up in the excitement and risk more than you intended, especially if you see others making big profits.
Yeah, the source warns against that very temptation. It emphasizes that trading should never be about gambling or chasing quick riches.
Right.
It's about making calculated decisions, managing risk prudently, and growing your capital sustainably over time.
So it's more about building a solid business than hitting the jackpot.
Right.
More about slow and steady wins the race than get-rich-quick schemes.
Absolutely. And this ties into another rule that highlights the importance of a long-term perspective. Learn from your mistakes. The source emphasizes that every trade, whether a win or a loss, is an opportunity for learning and growth.
I've heard that before, but it's honestly hard to put into practice.
Sure.
When I lose money, my instinct is to just forget about it and move on. How does the source suggest we actually learn from those mistakes?
Well, it encourages traders to develop a process for reviewing their trades, both successful and unsuccessful, to analyze their entries and exits, their emotional state during the trade, any external factors that may have influenced their decision-making.
So it's not just about feeling bad when you lose, it's about turning those losses into valuable data points that you can use to improve your future trading decisions.
Exactly. It's about cultivating a growth mindset, constantly seeking to refine your understanding of the market and your own strengths and weaknesses as a trader.
This is fascinating stuff. Okay, we've covered a lot of ground here, but there are still a few rules I'm curious about. For example, this one really jumped out at me. Don't be afraid to take profits. Isn't the whole point of trading to make profits? Why would anyone be afraid to take them?
It's a surprisingly common psychological trap. Many traders, myself included at times, get caught up in the potential for even bigger gains and end up holding on to winning trades for too long.
So it's that fear of missing out, that greed factor we talked about earlier.
Precisely. This rule serves as a reminder that a profit is a profit no matter how small.
Right.
It's better to secure a gain and move on to the next opportunity than to risk losing it all by being too greedy.
It's like that saying, you can't go broke taking a profit. Sometimes it's best to just walk away from the table while you're ahead.
Exactly. And along those same lines, there's another rule that emphasizes the importance of emotional detachment. Don't fall in love with your trades.
Okay, I'm intrigued by this one. What does it mean to fall in love with a trade?
It means becoming emotionally attached to a particular stock or trade to the point where it clouds your judgment. You start making decisions based on hope or loyalty rather than on your analysis and your trading plan.
So even if you have a strong feeling about a company or a sector, you need to be able to detach yourself emotionally and make objective decisions.
Right.
Kind of like a poker player who knows when to fold, even if they have a good hand.
Precisely. It's about recognizing that every trade is a separate entity, and your goal is to maximize your profits, not to prove your loyalty to a particular stock.
This is making a lot of sense. It's about taking a more disciplined, analytical approach to trading
Yeah.
rather than letting emotions drive your decisions.
Exactly. And to bring it all full circle, the final rule in this collection really encapsulates everything we've been discussing. It's a powerful statement that puts all the other rules into perspective. All traders are created equal in the eyes of the market. The market itself is what determines what will be and where it will go.
Wow, that's profound. So what does it mean? Is it saying that our individual skills and knowledge don't matter? That we're all just at the mercy of random market forces?
Not exactly. It's acknowledging that while discipline, skill, and knowledge are essential for trading success, there's always an element of unpredictability in the market that we can't control.
So it's a call for humility, a reminder that we're not masters of the universe, we're participants in a complex, ever-changing system.
Precisely. It's about respecting the power of the market while simultaneously striving to master our own emotions, our own decision-making processes.
This final rule really brings it all home, doesn't it?
It does.
It highlights that balance between discipline and adaptability, between knowledge and the acceptance of uncertainty. It's a powerful message to end on.
I agree. It's a reminder that trading is a journey, not a destination. And the path to success is paved with continuous learning, self-awareness, and a deep respect for the forces at play in the market.
Well, there you have it, folks. We've explored these fascinating 25 rules, gleaned from a unique Hebrew source, and uncovered a wealth of wisdom about the mindset, the mechanics, and the ever-evolving nature of trading success. I don't know about you, but I feel like I've gained some valuable insights today.
Me too. And as we conclude this deep dive, the question that lingers is this: how will you apply these insights to your own trading journey? How will you navigate the balance between discipline and adaptability, between knowledge and the inherent uncertainty of the market?
That's the challenge and the excitement of trading. It's a constant process of learning, adapting, and striving for success in a world that is constantly in flux. So go forth, dear listener, armed with these newfound insights, and may your trades be ever in your favor.